New York Fed is losing talent and street cred under John Williams. Bloomberg. John Williams took the helm of the Federal Reserve Bank of New York in 2018 as a highly respected macroeconomist and experienced manager who had run the San Francisco Fed district for 7 years. Today, he oversees an institution that many veteran market participants worry has suffered a brain drain and seen its influence wane on Wall Street. Most read from Bloomberg. Russia is sending young Africans to die in its war against Ukraine. Macron and Scholz get trounced by far-right in EU elections. Putin is running out of time to achieve breakthrough in Ukraine. Scholz's SPD suffers record rout in Germany's EU vote. There's still a way to snag a 3% mortgage rate. The departure of many officials since 2022 from senior roles at the bank, who each had more than a decade of experience, has sparked concerns over an exodus of talent since Williams took over. That's in turn shined a brighter light on his own resume, which some ex-central bank officials and Wall Street professionals lament lacks the market experience of his predecessors. New York Fed watchers also note that the Dallas Fed president since mid-2022 and the incoming Cleveland Fed president each have deeper backgrounds in finance, adding to a perception that New York is no longer the dominant voice on markets. That's all a worry because, historically, it's the New York Fed that has played the vital role in steering the financial system through crises, as it did in 2008, the 2020 COVID shock, and multiple other occasions of danger over decades. It's now charged with withdrawing liquidity, and next year will be crucial to spotting any early signs of potential turmoil as the U.S. Treasury exhausts its statutory borrowing authority. This article is based on interviews with more than a dozen former New York Fed officials, along with longtime strategists, economists, and traders at major banks and investment firms. Most of the people spoke on condition of anonymity to discuss sensitive issues. There used to be a lot of solid people at the NY Fed with street cred, said Ward McCarthy, who worked for over 4 decades in markets before he retired in 2020 and once served as a senior economist at the Richmond Fed. That had helped us in the markets with the perceptions that these people helped to strike a balance relative to Williams being the president. But most all of them have now left. Williams extols his staff's capabilities, saying last month that what's really helpful for the policy-setting Federal Open Market Committee is that the New York Fed brings a wide range of views and expertise to all the issues.